What's up, guys? I'm nobody special, and it seems like the markets have shrugged off the Evergrande crisis. Doing pretty well today, a lot of green. The press is very quick to say, oh, don't worry, Evergrande is no Lehman Brothers moment, that it's behind us now. We can shake off this worry. There's no contagion. Go about your day. Nothing to see here. Move along, right? Not so fast. Ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm nobody special. And looking at the press today and the financial media, it seems like the Evergrande crisis is over. Thank God, that was close. We can all go about our happy, plebeian little lives. Nothing to see here. Move along, right? It's not that simple. It seems like the press is just like they all got together last night and said, hey, let's decide the Evergrande story is over. Now, Chinese markets opened yesterday, and they initially sold off about 1.5%. They recovered some of their losses, and they closed the day mostly flat, down just a little bit, I think. So Chinese stock market obviously didn't seem terribly worried about Evergrande yesterday. And there was even some news today that Evergrande may be able to make one of their interest payments. So there's some good news on the horizon, and it's not raining cats and dogs, obviously. It's not the end of days. But I'm not so sure that this crisis is over yet, and we're going to get into that why. But first, I have to ask, guys, please, if you can, smash that beautiful transitory like button, subscribe to my channel. Don't forget that notification bell. It really helps me out. It helps me to keep this channel growing, and I'd be forever in your debt. Now, with that being said, I want to draw your attention to this video from yesterday. And this was put up by George Gammon, who's a fantastic YouTube channel called Rebel Capitalist. And he did a video yesterday that drew some parallels between the repo market in the lead up to the Lehman Brothers collapse and the Chinese repo market today. And I'm going to put a link to that video in the description. I highly recommend you check it out. I remember watching this video yesterday and just saying, wow, there it is. I mean, there it is for all to see. Now, I'll summarize it briefly, but I highly recommend you go check out that video. George, if you're watching, excellent job. Fantastic research. Quick refresher. When Lehman Brothers collapsed, one of the reasons why Lehman collapsed was because lending between the big banks in the United States dried up. All right, and we saw it first in the repo market. Remember, repo is these big, large loans that the major banks lend back and forth to each other for very short terms, usually only a couple of days, sometimes even overnight, in exchange for collateral, usually treasury bills, but at the time they were using mortgage-backed securities. Mortgage-backed securities were considered pristine collateral back before the global financial crisis. They were basically looked at as reliable as U.S. treasury bills. So the banks were making these big loans back and forth, and then all of a sudden people started to get a whiff of something was going on in the housing market, and the banks stopped accepting mortgage-backed securities as collateral for these big loans back and forth that they needed to make ends meet at the end of the day. And that's what drove Lehman bankrupt, because Lehman needed about $85 billion in cash to cover some of their short-term requirements. But like $45 billion of their collateral at the time was mortgage-backed securities, and the other banks said, we're seeing a wave of foreclosures. The real estate market is in the process of imploding. We are not going to make you a loan with mortgage-backed securities as collateral anymore. Sorry, Lehman Brothers, but you're on your own. And with that, Lehman Brothers failed. And that was the big spike that we saw in the repo market before the Lehman collapse. And as George Gammon pointed out in his video yesterday, this actually started about 6 weeks before the actual collapse of Lehman Brothers. So the repo market gives you a preview of stress going on in the market. And again, don't take what I say. Go and watch George Gammon's video from yesterday, please. Watch it in its entirety. But what he figured out is he found some data on the Chinese repo market. Now, I have to keep in mind that it is so hard to get reliable data out of China. The data that they do let out is unreliable at best. But George Gammon managed to come across some information on what makes up collateral in the repo markets in China. And now it was dated in 2015, so it's a few years old. But it's a good bet that this situation has gotten worse because the real estate bubble in China has only inflated further since 2015. But George Gammon figured out that under the category of financial bonds in the Chinese repo market is mortgage-backed securities. And it's not, it doesn't explicitly say mortgage-backed securities, but it lists in the definition loans from a bank to someone, usually, typically, or for example, a loan to buy a home. Well, that sounds an awful lot like a mortgage-backed security, doesn't it? When they're using home loans as collateral to borrow cash in the overnight markets. Yeah, that's a mortgage-backed security, folks. I mean, that is exactly what Lehman tried to use for collateral and couldn't back in 2008. So, using the data that George Gammon found, it turns out somewhere as high as 35 to 45% of the collateral in the Chinese repo market is mortgage-backed securities. And that's important. Keep that in mind because I want to show you something. Now, looking at this right away, Yahoo Finance, oh, look at the main headline. Stocks aim to shake off Evergrande blues with Fed on tap. Okay, so that's worth pointing out. We have the Fed coming out today. Is Jerome Powell going to talk about taper? Isn't he going to talk about taper? Is he going to give us a specific timeline? But that's another topic. Maybe we even do another video today. We'll see what kind of time we have. But I want to point out this article, and this is on CNBC. Here's why the Evergrande crisis is not China's Lehman moment. And there are some things in this article that just made me cringe, that I couldn't believe that these are well-educated, highly sophisticated individuals who are saying this crap. Because listen to just the arrogance and the hubris in some of these statements. All right. When it comes to the actual scale of impact, analysts point out that China's Evergrande holds land while Lehman held financial assets. All right, think about that. So they're saying, first of all, right here in the headlines, the big difference is Lehman had financial assets. Evergrande has actual land. Okay, that's true. Evergrande does hold land. But you know what? If Evergrande's assets are so great, how come they can't sell any of it? How come they're having such a hard time raising cash right now? If they've got these great assets, this land, and why don't they just sell it to get the money that they need to make their payments? Because they can't. Because the land is not worth anywhere near what they say it's worth. Because those assets are crap. Because what good is land when you've already got 20% of the homes in the whole country are vacant? If it costs 46 times the annual salary to buy a home, what good is the land? Nobody can afford it. All right? The housing market is crashing. Land is not a liquid asset at this point. So for them to say Evergrande holds land and therefore it's not a Lehman Brothers moment, okay, yeah, Lehman held financial assets, right? That's true. But what were those financial assets? Mortgage-backed securities. And what are mortgage-backed securities comprised of? Loans. And what backs those loans? Land, real estate. It's the same damn thing, folks. It's the same thing. Lehman Brothers' toxic assets was mortgage-backed securities, which basically derives its value from land. And Evergrande's problem is it's got a whole bunch of land that nobody's willing to buy, that they paid way too much for. It's the same thing. All right, and these people at CNBC, they should know better than this. This is just a ridiculous, ridiculous statement. All right. International Monetary Fund chief economist, somebody whose name I cannot pronounce, told Reuters this week that the organization believes China has the tools and the policy space to prevent this turning into a systemic crisis. And that only an elitist muckety-muck from some kind of central bank could come up with a statement there. What they're saying there is that China's government is draconian enough and that they don't care about the laws, that they do whatever the heck they want, and therefore they can handle this. That's one way to look at it. Another way to look at it is to say China's government is so draconian and so willing to act with a total disregard for law that their capacity to screw this up further is unlimited. That's one way. That's how I look at it. All right. I don't look at it as saying China rules with an iron fist and therefore they've got everything under control. No, I say China rules with an iron fist and has everything under their control, and that's the problem. That's the problem. Remember, China started this mess. They started this mess with their stupid draconian one-child policy that created this demographic imbalance and a population collapse that has now resulted in home ownership being the only way a man can ever hope to get married, and therefore he's willing to pay any amount of money he could possibly get his hands on for a home. And it's also the reason why the population is now collapsing. There aren't enough kids being born to sustain the population, which is leading to all these vacancies. I mean, the fact that China has everything under control, that's what created this mess. Sorry. And then they had to create the 3 red lines policy. I did a video on that yesterday to try to cool the housing bubble, just like Ben Bernanke started hiking interest rates to try to cool the housing market in 2004, 5, 6, and 7. They created this crisis, folks. They created it. So the fact that they do whatever they want does not instill one iota of confidence in nobody special. I'm just over here like, yeah, that's the problem. Anyway. Here we have again, Evergrande holds physical assets. And they're talking about, because Evergrande has land, it's different than Lehman because Lehman held financial assets. And again, if you can't sell your assets, then they're worthless. They're not really assets. If you can't access the money, they can't sell them, they can't borrow against them anymore. They don't have the assets. All right. It's every bit as bubbly and as risky as the mortgage-backed securities were that Lehman was holding. It's the same thing. And lastly, I want to read this paragraph here. And this is under the headline of strong government control. Again, CNBC is writing this article as if strong government control is a good thing. I can't believe that, but okay. They say, Beijing says lend, so you lend. When or even whether you get your money back is secondary, the report said. No Lehman-style contagion story makes sense here, and therefore no Lehman moment will there be. So the reason why they say there won't be a banking crisis is because when the government tells you lend whether or not you get your money back. Well, when too many people lend and don't get their money back, isn't that where banking crisis come from? Isn't that the problem? Oh, yeah, we'll just make loans and they won't get paid back. And that's how we'll fix our banking crisis. What? Folks, do these people have any self-awareness whatsoever? Are they able to step back from these statements and unpack them and say, wow, did I really just say that? Did I really just say that, oh, it's okay if we have a banking crisis because we'll just loan money and not get it paid back and everything will be fine? No, folks, that's how you get a bank. That's how banking crises get worse. You see, this kind of stupidity, this kind of stupidity is why I think it's more that China's draconian government control means their ability to screw this up further is unlimited. All right. You see, we have checks and balances on the authority of government because the forefathers in this country recognized nobody has a capacity to screw something up worse than the government. And so they put controls in place, controls that are obviously being eroded these days. It's a topic for another day, and we're treading dangerously close to politics here. I apologize for that. But again, China's draconian control is not an asset. It is not a good thing. It means they're going to make it worse. If they can make it worse, they will make it worse. Now, again, I want to circle back here to the situation with the repo market. And when I read this article in the context of George Gammon's video about the repo crisis and Lehman Brothers, it was an aha moment for me. Because this came out today. China injects $26 billion into banking system during Evergrande crisis. All right, this is saying that the People's Bank of China, the Chinese central bank, injected $26 billion. You know, it was actually like 190 or 120 billion yuan, but it was the equivalent of $26 billion US. They had to inject into their banking system in the overnight repo market. So again, the problem with Lehman was their collateral stunk, right? The problem with Lehman was their collateral wasn't good enough, and the banks wouldn't lend to each other. And I talked about a few videos ago how the problem in China's banking system is going to get worse because the banks are going to start playing defense, and they're going to start tightening up their lending to each other. Nobody is going to realize who's got what exposure to Evergrande, and nobody's going to want to get caught holding the bag, so they're going to stop lending to each other. And that's what we're seeing here. All right, what we're seeing here is the repo markets. The banks are getting more choosy about how much they lend and to who and what they accept as collateral, to the point where the Chinese central bank is having to get involved and inject liquidity to keep things flowing in the plumbing, to keep the financial system moving. So what we're seeing here is basically a bailout or a bail-in of the banks happening in real time. $26 billion overnight. That's a lot of money. That's a lot of money in China. I mean, we're talking about ending QE here in the U.S. We're printing $120 billion a month. Well, they did $26 billion in one day. That's a big deal. China's banks are already starting to tighten their lending, and the government is having to print and inject it into the system to keep things flowing. So, George Gammon, I think you're onto something, rebel capitalist. I think you're right about the repo market in China, and that it's largely comprised of mortgage-backed securities, or whatever they call them in China. Financial bonds, I think, is the term that they used. Yeah, I think it's basically the same thing. They're using collateral. They're using these land and these worthless apartments for these massive loans between the banks, and the banks are starting to sniff it out, and they're starting to say, no, that's too risky for us. And this tells me that the Chinese central bank is already having to bail it out. So watch these they'll call them liquidity injections, right? Watch how interventionist China's government has to get, because this is the government bailing out the banks in real time. This is what they're doing. They're not bailing out Evergrande, and foreign investors are still screwed. If you're a foreign investor and you hold Evergrande bonds, sorry, you're not getting your money back, right? China may ensure that Chinese citizens get some of their money back, but the property market in China is still imploding, and this is further proof of that. And again, the real problems always show themselves in the repo market first. Just like it was, as George Gammon said, it was 6 weeks before Lehman actually collapsed that they were effectively shut out of the repo market. It took 6 more weeks for them to collapse. So just because we have one green day right now, and the press all got together and decided to sing Kumbaya, thank God that's over, don't think the Evergrande story and the Chinese real estate story is over. And one more thing I want to point out, this is not a new story, China injecting $26 billion. Because I found this article from not quite a month ago, August 25th, China's central bank increases cash injections to soothe tightening worries. Again, the lending was starting to dry up. This was back in August 25th, and back then they injected 50 billion yuan, or about $7.7 billion overnight on a daily basis. So in 1 month, they've gone from their daily liquidity injections of under about $7.5, $8 billion to where they are now injecting $26 billion overnight. So keep your eye on this Chinese central bank and what they're doing. We're seeing the beginnings of a banking crisis happening, even if the idiots in the press are out there saying it's not happening. So again, I highly recommend you guys check out that video that George Gammon did. Again, it's this one, and I will put a link to it in the description below. And George, excellent DD that you found that. Again, it is so hard to get reliable information out of China, and even when you can find it, it's shaky at best. But here's the thing. If you can get data and the data from China is not good or indicates there's a problem, it's a safe bet the actual problem is much, much worse. So the fact that George Gammon was able to take this data from 5 or 6 years ago and say, hey, look, it looks like the Chinese repo market is largely made up of what's essentially mortgage-backed securities. And now we've got Chinese central banks are having to inject liquidity into the repo markets overnight. Folks, this is starting to look a lot more like the global financial crisis, like GFC 2.0. And just because the financial press is saying, whew, that's over, go ahead, everybody go back in, buy the dip, all right? Watch that closely. I'm not so sure this is over yet. All right. So we are going to stay on top of this story. And again, we have the Fed is coming up today. Who knows what they're going to say? A lot can happen in a couple hours. It is a busy Wednesday, folks. But that's all I have for you for right now. I want to thank you guys for your time. Thank you for watching this video. Again, please don't forget to hit that transitory thumbs up button, subscribe to my channel, hit that notification bell, all that good stuff. It helps me keep growing, and I'd be forever in your debt. Guys, in the meantime, live small and dream big.